Yo, what's up, everybody? It is still Monday. I did two videos earlier. I'm not going to be talking about that stuff this time. I'm just going to do a market wrap. Markets closed lower today. A lot of today's price action, I think, was just election related, and actually a lot of it, for the past couple of weeks has been election related. You see. You see that pretty much everywhere in commentary, people talking about, if Trump wins, we're going to have this kind of a economy. If Harris wins, we're going to have this kind of economy. I keep saying, it's better to just, let's get through this election. I think actually a lot of bets have been made on an outcome that looks like highly inflationary. You got people who have been recently piling into gold a lot. You got that sell-off in the bond market and yields backing up. I'm skeptical about those moves. To me, frankly, it reminds me of the universal calls for recession in 2023. Everybody, not me and not in my report, but everybody was saying there's no way that the economy is going to avoid a recession in 2023. That was absolutely not the case, and I explained why that would not be the case. I said as long as Congress raised the debt ceiling, which they did, the market was going to go to new highs and the economy was going to be fine. And I based that on the fiscal flows, particularly the interest income transfers. And so I've been here now for a while explaining to you guys how I think the Fed rate cuts, and we only had one. We're going to get another one on Thursday. Thursday. That'll be the second one. These rate cuts, as they come along, as they happen, they're going to equate to a reduction in those interest income transfers. I've been saying a lot about how, the economy's growing. Well, right now, the Atlanta Fed has fourth quarter GDP at 2.4%. Remember, they had it at 3.4% for the third quarter. The actual number came in at 2.8%. They got fourth quarter GDP at 2.4%, so it's trending lower. These are developments that I expected. It's basically what I've been telling you as to how it's going to play out. So, and again, well, the more rate cuts we get, we're going to get one this week. We'll get another one in December. We might get another one in January. The more rate cuts we get, the larger the drop in interest income transfers, and that's going to make a difference. I don't know what new policy, economic policy, is going to be implemented and passed in the new administration, whoever wins. I'm pretty sure we're not going to get, I think this fixation on an inflationary scenario, just right from the fact that so many people are betting on this makes me highly skeptical. But also, if I were to look at the policies that have been spoken about in each candidate's speeches and rhetoric, I just don't see an inflationary spike. I just don't. So I'm betting against that. And right now, as I look at the data, as I look at what's happening in the economy, it's playing out pretty much how I expected to play out. And I didn't anticipate any very rapid evolution of this at the beginning. It's going to take time, because the Fed is cutting at a slow pace. But nevertheless, those cuts, again, are just going to lead to a reduction in those interest income transfers. The economy is going to slow down. Stocks are going to respond to that negatively. Gold is going to go down. As a matter of fact, I think, this gold market, when you look at commitments by the different players in the market, producers, banks, large, speculators, small speculators. There's a record long position held now in gold futures by large speculative funds, hedge funds, managed futures funds, even Goldman Sachs. Today I saw an article where Goldman Sachs has adjusted its gold outlook because of concern over positioning. That I didn't read the entire article because it was behind a paywall, but I could pretty much guess what it was all about. I don't know if there's ever been a crash in gold, an actual crash, like a really, really big drop in a day or two. But I can definitely see the possibility of that happening after this run-up that we've had, and how so many people have piled into gold recently on this inflation outlook, expectation. It could be really spectacular on the downside. And I don't think we've ever seen anything like that in gold before. There's been corrections. There's been some sharp drops in the past. But an actual crash, that would be interesting. I think that would be very, very interesting. And it would change a lot of attitudes towards gold. Especially, I think, on the part of central banks and these so-called these BRICS, Brazil, Russia, India, China, South Africa, these countries that are trying to form some new economic bloc, which to me, it looks like, basically a clown show. I mean, you have all these exporters, trying to form an economic bloc where there's no net buyer. They're all exporters. They all think that gold is gonna somehow, support their economies. It's kind of funny to watch. I mean, they just recently had a gathering. Not much came out of that. There was a lot of talk, yap, yap, yap. But they're all loaded up on gold, along with everybody else, it seems. And I think what escapes a lot of people, the other thing is, like, I've seen headlines. I've seen people talk now about how gold is the ultimate hedge against everything. It's the hedge against inflation. It's the hedge against deflation. It's the hedge against a strong economy. It's the hedge against a weak economy. I mean, what is it? I said in a past video, you might as well drop the L in gold and just call it God, right? But it's not, believe me, it's not going to play out like a lot of folks think it's going to play out. It's just not. All right, I've been around too long. I've seen markets too long. And the economics is just not there. All right? In an economic downturn, gold is economically sensitive, whether you like to hear that or not. In an economic downturn, that is not a bullish environment for gold. All right? So anyway, let's get through this election. Let's see what happens. Tomorrow, I remember in 2016 when Trump won, the night of that vote, there was some wild swings in the market. So I expect to see the same thing as the numbers, the polls start to come in and get reported tomorrow night. It could get really wild and crazy, folks. So just my advice is stay calm, step back a little bit, relax, don't stare at the markets, take a big picture perspective, let this noise pass, and we will have information. There will be policy, there will be things and to strategize on. So, I mean, don't freak out and just let it happen. Let's get it over with and move on from this. Anyway, that's it for today. Please like and subscribe. If you've done that already, thank you very much. And don't forget to go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. See you tomorrow. Election day. Vote.